Hello everybody. Welcome back to my channel, where I share with you the best tips and tricks on how to save money and grow your wealth. Are you ready to uncover the hidden secrets of a financial tool that can revolutionize healthcare savings? In today's video, I'm going to tell you the truth about health savings accounts, or HSAs, and why they are one of the best financial tools you can use to pay for your healthcare expenses. We are also going to uncover what are some common mistakes to avoid when using an HSA. Now, let's talk about HSAs. You may have heard of them, but do you really know what they are and how they work? If not, don't worry, because I'm going to explain everything you need to know in this video. And I'm going to debunk some of the common myths and misconceptions that people have about HSAs. So, what is an HSA? An HSA is a tax-advantaged savings account that you can use to pay for qualified medical expenses. Think of it as a separate saving account that you can use for medical-related costs. The money you put into an HSA is tax-free, which means that you won't pay income tax on the money that you put directly into your HSA, and you'll save on income taxes for the year. Plus, the money in your HSA can grow tax-free, and you can withdraw it tax-free as long as you use it for eligible medical expenses. That's a triple tax benefit that you won't find in any other type of account. But that's not all. An HSA also has other benefits that make it a powerful financial tool. For example, an HSA is portable. This means that you can take it with you if you change jobs, switch health plans, or retire. You own your HSA, not your employer or your insurance company. You can keep your HSA for life and use it whenever you need it. An HSA is flexible. This means that you can use it for a wide range of medical expenses, not just what's covered by your health plan. You can use it for things like dental care, vision care, prescription drugs, over-the-counter medicines, and more. You can also use it for things that are not covered by your health plan, such as acupuncture, chiropractic care, fertility treatments, and more. You can even use it for your spouse's or dependent's medical expenses, even if they are not on your health plan. An HSA is rollover. This means that you don't have to use up all the money in your HSA by the end of the year. Unlike a flexible spending account, FSA, which is a use-it-or-lose-it type of account, an HSA lets you keep your unused money for future years. You can save it for a rainy day, or for a big medical expense down the road. You can even save it for retirement, and use it as a supplement to your other retirement accounts. An HSA is investable. This means that you can invest the money in your HSA in various options, such as stocks, bonds, mutual funds, and more. This way, you can make your money work for you, and potentially grow it faster than a regular savings account. You can also choose how much risk you want to take, and how involved you want to be in managing your investments. You can be as conservative or as aggressive as you want, and as passive or as active as you want. As you can see, an HSA is a great way to save money and pay for your healthcare expenses. But how do you get one? Well, there are two main requirements that you need to meet to be eligible for an HSA. First, you need to be enrolled in a high-deductible health plan, HDHP. This is a type of health plan that has a higher deductible than a typical health plan, but a lower premium. A deductible is the amount of money that you have to pay out of pocket before your insurance kicks in. A premium is the amount of money that you pay every month for your insurance. By choosing an HDHP, you are basically trading a lower monthly cost for a higher upfront cost. But don't worry, because that's where your HSA comes in. You can use your HSA to cover your deductible and other out-of-pocket expenses, and save money on taxes at the same time. The second requirement that you need to meet to be eligible for an HSA is that you have no other health coverage. This means that you can't have another health plan, such as a spouse's plan, a Medicare plan, or a VA plan. You also can't be claimed as a dependent on someone else's tax return. You have to be solely responsible for your own healthcare costs. If you meet these two requirements, then you can open an HSA and start saving money for your healthcare expenses. You can open an HSA through your employer, if they offer one, or through a bank, a credit union, or an online platform. You can contribute money to your HSA through payroll deductions, direct deposits, or transfers from other accounts. You can also receive contributions from other people, such as your employer, your family, or your friends. The more money you put into your HSA, the more money you save on taxes, and the more money you have for your medical expenses. But how much money can you put into your HSA? Well, there are limits that the IRS sets every year, based on your type of health plan and your age. For 2024, the limits are $3,650 for individuals, $7,300 for families, $1,000 extra for people who are 55 or older. These are the maximum amounts that you can contribute to your HSA in a year, including any contributions from other sources. You can contribute less than these amounts, but not more. If you do contribute more, you will have to pay a penalty and taxes on the excess amount. But how do you use the money in your HSA? Well, there are two main ways that you can access your HSA funds. One way is to use a debit card or a check that is linked to your HSA. You can use this to pay for your medical expenses directly at the point of service, such as at the doctor's office, the pharmacy, or the hospital. The other way is to pay for your medical expenses out of pocket, and then reimburse yourself from your HSA later. You can do this by transferring money from your HSA to your bank account, or by requesting a withdrawal from your HSA provider. Either way, you will need to keep your receipts and records of your medical expenses, in case you need to prove that they were eligible for your HSA. But what are the eligible medical expenses for your HSA? Well, the IRS has a list of qualified medical expenses that you can use your HSA for. These include doctor visits, hospital stays, surgery, lab tests, X-rays, prescriptions, dental care, vision care, hearing aids, mental health care, physical therapy, chiropractic care, acupuncture, fertility treatments, birth control, pregnancy tests, breast pumps, vaccines, smoking cessation, weight loss programs, over-the-counter medicines, first aid supplies, bandages, thermometers, contact lenses, eyeglasses, sunglasses, reading glasses, eye drops, contact lens solution, hearing aid batteries, wheelchairs, crutches, walkers, canes, braces, splints, artificial limbs, prosthetic devices, oxygen, insulin, blood sugar monitors, blood pressure monitors, CPAP machines, nebulizers, and more. This is not a complete list, but it gives you an idea of the many things that you can use your HSA for. You can find the full list of qualified medical expenses on the IRS website, or on your HSA provider's website. But what if you use your HSA for something that is not a qualified medical expense? Well, then you will have to pay a price. If you use your HSA for a non-qualified expense, you will have to pay income tax on the amount that you used, plus a 20% penalty. This is a big deal, because it will reduce the value of your HSA, and it will increase your tax bill. So, you want to avoid using your HSA for non-qualified expenses, unless you really have to. However, there is an exception to this rule. If you are 65 or older, you can use your HSA for any expense, not just medical expenses, without paying the penalty. You will still have to pay income tax on the amount that you used, but you won't have to pay the extra 20%. This means that you can use your HSA as a retirement account and spend it on things like travel, hobbies, or gifts. This is a great benefit that makes your HSA even more valuable. So, as you can see, an HSA is a fantastic way to save money and pay for your healthcare expenses. It offers you tax advantages, flexibility, portability, and growth potential. It can help you pay for your current and future medical expenses, and even supplement your retirement income. It can also help you save money on your health insurance premiums by choosing a high-deductible health plan. But how do you make the most of your HSA? Well, here are some tips and tricks that you can use to maximize the value of your HSA. Contribute as much as you can to your HSA, up to the annual limit. The more money you put into your HSA, the more money you save on taxes, and the more money you have for your medical expenses. You can also increase your contributions over time, as your income and expenses change. Invest your HSA funds wisely, according to your risk tolerance and time horizon. You can choose from various investment options, such as stocks, bonds, mutual funds, and more. You can also diversify your portfolio across different asset classes, sectors, and regions. You can use platforms like Lively, Health Equity, or HSA Bank to invest your HSA funds with low fees and high returns. Use your HSA for qualified medical expenses only, unless you are 65 or older. You want to avoid paying taxes and penalties on your HSA withdrawals, and preserve your HSA balance for future use. You can use platforms like HSA Store, FSA Store, or Amazon to shop for eligible medical products and services with your HSA. Keep track of your HSA transactions and receipts for tax and audit purposes. You want to be able to prove that your HSA contributions and withdrawals were for qualified medical expenses, and that you did not exceed the annual limit. You can use platforms like Mint, Quicken, or Enab to manage your HSA budget and records. Review your HSA performance and goals regularly, and adjust them as needed. You want to make sure that your HSA is meeting your needs and expectations, and that you are on track to achieve your financial and health goals. You can use platforms like Personal Capital, Wealthfront, or Betterment to monitor your HSA progress and advice. Some common mistakes to avoid when using an HSA are: contributing more than the annual limit. The IRS sets a maximum amount that you can contribute to your HSA each year, based on your type of health plan and your age. If you exceed this limit, you will have to pay a 6% excise tax on the excess amount, plus income tax. You can find the contribution limits for 2024 in the first result. Using your HSA for non-qualified expenses. You can use your HSA funds tax-free for a wide range of medical expenses, but not for everything. If you use your HSA for something that is not a qualified medical expense, you will have to pay income tax on the amount that you used, plus a 20% penalty. You can find a list of qualified medical expenses in the second result. Not investing your HSA funds. You can invest the money in your HSA in various options, such as stocks, bonds, mutual funds, and more. This way, you can make your money grow faster than a regular savings account and benefit from the tax-free growth. If you leave your HSA funds in cash, you will miss out on this opportunity. You can find some platforms that let you invest your HSA funds with low fees and high returns in the third result. Not keeping track of your HSA transactions and receipts. You need to keep records of your HSA contributions and withdrawals, and the receipts of your medical expenses, for tax and audit purposes. You need to be able to prove that your HSA funds were used for qualified medical expenses, and that you did not exceed the annual limit. You can find some platforms that help you manage your HSA budget and records in the fourth result. You've just unlocked the truth behind health savings accounts. By understanding the ins and outs of HSAs, you can take control of your healthcare expenses and potentially save a significant amount of money. Remember, it's crucial to consult with a financial advisor or tax professional to fully optimize your HSA strategy. If you found this video helpful, don't forget to like, share, and subscribe for more valuable financial insights. Thank you for watching, and I'll see you in the next video.